everyone, and thank you for tuning into this month's Screener newsletter. My name is Callie Ochanicki, and I'm a member of the Customer Success team. A recurring topic that I've discussed with several of our clients is volatility within the stock market. Recently, I've chatted with clients who are concerned with the wild market movements we witnessed this year. I see many clients screening for stocks with the lowest volatility in order to protect the assets in which they invest in. Volatility can be best described as large swings in either the positive or negative direction over a sustained period of time. Investing in stocks with lower volatility tend to remain steady, thus easing the nerves of many shareholders. Today we're going to jump into the Equity Screener tool to create a universe of low volatile stocks for all major U.S. markets. Next, we will add metric filters to examine momentum and low beta. Last, we will finish with the scoring model to rank historical volatility. Now let's get started. First, we're going to hover over Tools, and we're going to select Equity Screener. Next, you're going to modify the equity universe, and when you click on Modify Equity Universe, we will then go to Types, and then we will select Stock. The next modification to the universe we're going to make is to the exchanges. We're first going to click on Exchanges, then click on United States Exchanges, and then select all major U.S. exchanges. By making these selections, this will automatically only include stocks, and then you will notice that we narrowed down our universe from over 21,000 securities to just over a little over 4,700 securities, with a focus on primarily U.S. stocks. Next, we're going to add some quantitative filters. First, you'll click on Add a Metric Filter, and the first metric we're going to include is Beta 5-year. We're going to set the drop down to less than 1. And the reason that we are adding this metric filter is because we want securities with a beta less than 1, and because these typically tend to be less risky investments. Second, we'll click on Add a Metric Filter again, and this time we're going to make an equation. The first metric we're going to select is 50-day SMA. We're going to make the drop down greater than, and the next metric will be 200-day SMA. This is known as the golden cross, and this is a signal that there is an upward price movement, which also signals that there is an upward trend to follow. The last step in this process is creating a scoring model. So if we click on Scoring Models, we're going to name this one Volatility Score. We're going to leave our score as a rank, which will rank the universe with 1 being the best score based upon our weightings. The first metric we're going to add is standard deviation of daily returns with a 5-year look back. We will weight this in at 50%, with a lower value as better. And I'm selecting standard deviation because we want a smaller variance between the price and the mean, demonstrating a smaller range. The next metric we're going to select is max drawdown with a 5-year look back, and we're also going to weight this in at 50%. We will select lower value as better because we want to account for the lowest drop from the peak to the bottom within the time period. Now, after applying this scoring model, you will see that if we organize the universe we have created based upon the scores given, the stock RSG is going to rank in first according to these specifications. Now, if you have any questions in regards to the screen I've created today, feel free to reach out to your support contact for more information. Thank you all again for watching, and stay tuned for further Screener newsletters.